market guest, Jitendra Arora from ICICI Prudential Life, to join us now to discuss the market fundamentals and his top sectoral bets. Jitendra, I wanted to start off by asking you about banks. The Nifty Bank was the first sectoral index to get back to its record high. It had fallen the least also in the global turmoil, but the way the banks have moved up, it's been a nearly 8,000 point rally over the last couple of days in more than a month on the Nifty Banking Index. Where from here are you overweight banks? Would you buy banks at current levels? And in the financial space, let me rephrase that, what would be your top picks?
Good morning, Reema. Yeah, so I've appeared on the show earlier also, and I think at that point also we highlighted that from a domestic perspective, we continue to like banks. So banks have been one of our favorite picks for last 6 to 12 months. And we continue to hold the same view even as of now. Because if you look at the medium term to long term earnings construct and growth construct and put the valuations on top, we believe that the risk reward for Indian private sector banks is still one of the better ones in the current market. So yes, the banking sector will be one of our overweight calls in the current market.
What about wealth management within the financial space? We've just seen a very large deal brewing now. UBS will be acquiring a near 5% stake in 360, WAM. And wealth management has emerged as one of the fastest growing sector in the financial industry. Do you like wealth management? Is it a part of your portfolio?
So we do not own wealth management companies because, again, by calling it a sector, it's a specialized wealth management companies are still very small part of the overall market. And you do get to play some part of wealth management by owning private sector banks because they also participate in their own way in this industry. But given the rising wealth accumulation by the Indians, obviously it's a very, very interesting segment of the market. However, one must remember that as you become wealthy, the capital can find other shores as well. So then, in some ways, it is also part of a global industry at large. So you do not get to retain everything on domestic shores. So to that extent, there can be plays which will compete with you from the international markets rather than only in the domestic market.
Jitendra, how do you then play the capital markets theme? Do you feel that an exposure maybe to some of the exchange stocks would be a better play, would be a better way to play this particular theme?
There are various plays available on the capital markets. You can play it through the long-term savings players like insurance. You can also play them through mutual funds, and you can also play them through various exchange and transaction-related plays like RTAs as well as the exchanges. So those are some of the plays available, and some of them have shown remarkable long-term growth. Something like a mutual fund space has shown a remarkable growth over last 20 years in terms of AUM as well as earnings, and I think they are one of the ways to play the entire theme per se. What one has to be cognizant about is essentially the point in cycle where you are entering and exiting, and what kind of multiples are you paying from a short to medium term perspective versus a long term perspective.
Completely take that point up. How are you now looking at the export space? A lot of worries about tariffs, but most of the stocks have recovered quite significantly from the recent lows. So how do you look at the pharma pack in particular? Still tariffs haven't been announced there, but it continues to remain as an overhang.
I agree. But having said that, I still believe that pharma will remain a relatively insulated sector from a tariff perspective. That's what my belief is. Having said that, you will still want to wait to see what's the news coming on that front, because the segment where Indian players are competing, which is essentially the generics, I think we have a fair bit of cost and pricing advantage there. However, our linkages to China in terms of KSMs and APIs is fairly strong. So to that extent, how does that affect the overall sector remains to be seen. But I believe that pharma will remain insulated from a tariff perspective overall, given its critical nature to the US consumer as well as our own cost competitiveness there.
So your overweight financials broadly, what else? What else do you like at these levels? Tell us what you're holding in your portfolio, and also incrementally when you have to go and buy, because not all the themes that you own in your portfolio will offer the risk reward to give you an entry point. So what would you buy at these levels?
Carefully evaluate some of the retail plays which have been depressed in the current market. We are overweight retail significantly in our portfolio because, again, it's more a domestic consumption growth story which we are trying to play through Indian retail players per se. Within that, you will find that there are names which are currently depressed because of the recent performance. But if you believe in the long-term performance of some of those companies, you will still find them investable even at current points in time. And then you will always have relative plays available within the space, wherein you may want to sell something and buy something, even though it may appear pricier. In terms of other segments, I think you will find a lot of cyclical names which are undergoing correction, and I think another 5 to 10% correction in some of these names will make them very, very interesting opportunities from a 2 to 3 year horizon, given that some of them are undergoing a cyclical depression in their margins as well as are facing slowdown in terms of their revenue growth. But if you look at the long-term prospects of some of these companies and the multiples where they have reached, I think you will find good, interesting entry points in some of these names.
Sorry, in cyclicals, you mean auto? Which sector are you looking at?
Something like, for instance, building materials.
Building materials.
So
Any other?
Pointing out. In autos, I still think there is some more pain perhaps we are likely to undergo. Similarly, IT also, I believe we are likely to see some more pain. But I think another 5 to 10% lower from current prices, IT would have priced in a significant amount of pain, and we can look to buy into that also with a 2 to 3 year horizon.
Right. Jitendra, you mentioned autos and IT where are two sectors where you expect to see some more pain. Conversely, which are clear sectors that you will be avoiding at the current point of time? Any red flags from any sectors where you feel significant downside still remains?
So nothing per se in terms of a very significant downside at the sector level, because every sector honestly will have players which have not done well even in the current move, and some players which have overextended themselves. So obviously it has to be a bottom-up market per se. So you'll have to evaluate every company from a bottom-up perspective, irrespective of how the sector is doing, because there'll be banks which have not done well in the current banking cycle also from a long-term perspective. But that does not make them a buy per se.
Now, within some of the domestic names you mentioned, consumer durables, how are you looking at them? Names like Havells, Voltas, the upcoming summer season, do you like them at these current levels?
We'll avoid discussing names, but right. The consumer durables, we do have some plays available where we believe we had bought them in the recent correction, and the valuations had also corrected. So we have exposure over there.
Okay, and one final word, you spoke about retail, where you are evaluating opportunity. Without getting into stocks, but are we when you talk about retail, are we looking at the D-Marts, trends of the world? Or are you also looking at footwear, apparel, etc.? Some of the other
apparel, for instance, may be interesting at this point in time because, again, the valuations have corrected and also we are seeing earnings slow down. But with the government move on taxation, we expect some of these names may see some kind of growth coming back to them. So yes, that's an interesting space.
Thank you so much, Jitendra, for joining us and giving us a view across a whole host of sectors. Get you soon on the channel once again. Well, we now slip into a short break. We'll get you key expectations from HCL Tech earnings on the other side.